Good morning, planet Earth. This is your friendly host Atilla Yeşilada, reaching out to you from Istanbul, and you're at Real Turkey channel. We cover Turkish news, politics, economy, business news, and we try to be truthful as much as possible. This week I want to talk about Turkish financial assets. Mind you, I'm not an investment advisor, and this is certainly not investment advice. I'm sure you can get better advice from almost anyone, including winos under the bridge. But sometimes the future is so obvious and the threat is so imminent that it would be almost a sin or a crime not to warn people of the impending disaster. And that disaster is an earthquake in Turkish financial assets, which is coming up in a theater near you soon, next week. Let me lay out the context for you. Turkish financial assets, that's the lira, equities, bonds, swap rates, were embroiled in a serious turmoil over the last 2 weeks because of Operation Peace Spring, Turkey's military campaign in northeast Syria to carve out a safe zone, and threats of retaliation by Trump and the American Congress, as well as worldwide condemnation, including our Arab friends and our potential partners in EU. The market pricing didn't fully reflect the alarm among investors because, according to Bloomberg, Reuters, as well as other sources, state banks sold $7 or $8 billion of foreign currency to stop the depreciation of the Turkish lira. Last week on Tuesday and Wednesday, Turkish banking regulator BRSA instructed Turkish banks not to lend in the London TL swap market. So the swap market dried up, rates soared to roughly 20%, as a result of which London banks or hedge funds borrowing from these banks could not short the lira or Turkish bonds. So actually damage to Turkish assets was, and finally, Turkish capital markets regulator, SPK, banned short sales in Turkish banking stocks. So these are short-sighted measures, of course, but they mitigated part of the damage that would have occurred to Turkish assets. On Friday, American VP Mike Pence, on Thursday, met with President Erdogan, and they signed a protocol of ceasefire in the Operation Peace Spring, valid for 5 days, which calmed down the fears. But unfortunately, that too is extremely short-sighted because that ceasefire protocol is only binding between the White House and the Republic of Turkey. It doesn't cover the Congress, which, as everyone knows, acts independently of the executive branch. I read the news, I'm sure you all do. I read the website The Hill, Politico, essentially anything, including Daily Mail and National Enquirer. Everyone knows that the American Congress is extremely unhappy with Trump selling out to President Erdogan. Essentially, the American Congress knows that abandoning Syria to Erdogan entails abandoning Middle East to Iran and Russia, abandoning Saudi Arabia and Israel to Iranian threats. Again, I'm not pro-Saudi Arabia or Israel, but that's the way the Congress thinks. So there are several sanctions bills to punish Turkey, the first of which will probably reach voting stage next week. That one is concocted in the lower house, in the House. There's another one by Senators Graham and Van Hollen, I believe, in the Senate, which is really pretty tough. It may include a provision to ban American citizens and institutions to buy Turkish treasury foreign debt, which would be a disaster for Turkey's borrowing needs. Anyhow, clearly when these bills reach voting stage, investors will take notice and sell Turkish assets. There is another development which is extremely damaging to Turkey's financial institutions, which the markets, again, didn't pay much attention. A federal prosecutor in Manhattan court staged a lawsuit against Halkbank, charging that it had violated Iranian sanctions and laundered money. This is the third lawsuit. I don't know what will happen. I'm certainly not accusing Halkbank of violating any American laws, but it is my impression, which I heard from reliable sources, that OFAC had already found Halkbank guilty of such charges and sent a recommendation to Trump to levy fees and other sanctions on the bank, which Trump keeps on his desk but not implements. But this time, given Trump's weakened state on account of impeachment procedures, he may well open that file and levy some sanctions on Halkbank. Finally, the third threat to Turkish financial markets is the central bank monetary policy meeting, which will take place on Thursday. Excuse me. Turkish central bank, as we all know, is not an independent institution like Fed or European Central Bank. It is actually an extension of Mr. Erdogan's bureaucracy. It will take orders from Mr. Erdogan, and Mr. Erdogan will most likely order the central bank to cut rates further. The market thinks the central bank will cut rates by 100 basis points. Personally, I think they will not do less than 200 basis points. That, of course, is extremely damaging because Turkish savers are already migrating in large numbers to FX deposits. If we cut rates further, that will become an exodus, a tsunami, and the demand for additional dollars and euros will upset the currency market. Put all of these together, there is really a strong case to be made that the stability or the calm in Turkish financial markets will not last. This is a personal opinion and a warning to anybody who may or may not be interested in Turkish financial markets. You have just listened to another episode of Real Turkey Channel by Atilla Yeşilada. If you like what you have heard, please subscribe to our channel and share it with all Turkey enthusiasts. Goodbye from Istanbul.